Hello. It looks like we are still processing here. Did you guys get a freeze there on your
Yeah.
screen?
We did, yeah.
So we'll just
It
wait and see
happens.
if that comes up. Yeah, it's totally fine. In fact, we are just here to kick it off anyway. And so we can go ahead and get started. So thank you everyone who joined us. We are so happy to have you here. Today is about real-time payments, but more importantly, it's about the future of member engagement, deposits, and trust. So over the next hour, we're going to cut through the noise and show you exactly where this is going and how to act. So with no further ado, I will have Kristina kick us off with an intro. Kristina, welcome.
Well, thank you. Thank you for having me, and thank you for everyone who's in attendance. Excited to talk to you all today. So real quickly, my name is Kristina Wickersham. I'm an industry lead on the FedNow service. Previous to joining the Federal Reserve, I grew up in a bank, community bank, and then went to a very large bank doing just about anything, which I'm sure everyone here can relate to, right? Banker, lender, treasury, and then moved over to a fintech where I helped build digital platforms for online billing. And so I joined the Federal Reserve about 4.5 years ago, all for FedNow, helping financial institutions initially onboard to the service, and then now helping financial institutions with anything FedNow. So if you've got questions, you need education, talk strategy, to all the way to the end when you're live, our team is there to help. So excited to talk a little bit about FedNow today.
Awesome. Okay, Elizabeth.
All right. Hello, everyone. Elizabeth Osborne. I'm the Chief Operations Officer at Great Lakes Credit Union. So in the Chicagoland market, I've been here in this role about 4.5 years, same time I just learned as Kristina. So we joined in our new roles about that time. My background is banking. So this is my first credit union gig. But in my current role, I oversee technology, but I also oversee product on the deposit side, including payments. Payments has become such an important strategy for our credit union. It actually has its own standalone strategy. So I'm excited today to share stories and information about how we've enabled FedNow and what our future plans are strategically to continue to enable this service, just like any real-time service for our members.
Awesome, thank you. And John? We can't hear you.
Technical difficulties.
We had to have it.
Yep. So John Wingate, the founder and CEO here of BankSocial, really excited to be here today discussing the innovation that's coming available and how we're bringing that to market together with the Fed and so many great partners.
Thank you. And I'm Liz Winninger. I'm the EVP of Strategic Growth and Innovation here at BankSocial. I've been here for around 6 months. I came from QSO, where I was at for over a decade, and we did shared resources. So I'm really happy to be here, and I'll be moderating today for us. So we will kick it off with Kristina taking us away on actions at the Fed right now.
Yeah, well, thank you so much. So I first just want to start out with a small disclaimer that the views and opinions that are going to be talked here today are those of mine and not necessarily the Federal Reserve, Board of Governors, or Financial Services. So with that out of the way, I want to talk about what is FedNow. And when you get the slide up here, you'll see in the right-hand corner, there is a QR code for you to scan. It'll take you to our FedNow Explorer where you can find anything FedNow. So FedNow is a brand new payment rail rolled out by the Federal Reserve, and it's instant payments. So unlike any other payment rail that you have today, instant payments are available 24/7 by 365 and can be offered through the financial institution. What's really unique about the FedNow service is that these payments not only are available 24/7 for your members, but they settle in seconds through interbank settlement. So the funds are immediately available to your members, but the funds settle at that instant as well. So there's benefit to both parties there. The payments are irrevocable, but don't let that scare you, because remember, you service irrevocable payments today. The payments are secure. So through ISO 20022 messaging, which I know we might have some PTSD through the recent conversion, but I promise you it's all standardized now. And it's going to be smooth sailing from here. But FedNow does run on ISO. So these are credit pushes. So think not ACH, not debit pulls. These are going to be based on a good funds model. So we're going to push those funds out through a credit push each and every time. And the messages are rich in data because ISO supports that. So think about your, business members who might need extra information on invoices, or if you have your retail customers that need more information, ISO can support that through an instant payment. So one important thing to note here is that unlike faster payments, they really only appear to be faster, but the settlement doesn't happen immediately. So there's some risk, and there's typically kind of a two-step process, right? Additional steps to transfer the funds that can cause fees and delays. So when we look at what does this look like? What is it? It's a new payment rail. How does the Fed get involved? So if you look at this flow here, real quickly, I just want to mention that a sender can be anyone. So it can be a commercial client, it can be a consumer, it can be a financial institution. But in this case, we're going to say, I'm Kristina, I'm a traveling nurse. So I work my shift, I get off at 11:50, and I want to get paid. In this case, the sender could be the hospital sending me, Kristina, the nurse, a payment, and then, oops, I forgot to pay my light bill. So at 11:59, I initiate a payment to my electric company. And so then in that case, I'm the sender. But in any event, I use an interface to initiate my payment. That is sent to my financial institution that I bank with. And that can be through the help of a service provider. Let's take BankSocial, for example, to help enable not only the message sending, but perhaps the interface that can integrate with your online banking service or send the message to the FedNow service. So in step 2, you'll see that once the payment has been initiated and the FI with help through their service provider has vetted that payment, they'll send it out to the FedNow service. Now, this is where the magic happens, because in under 20 seconds, the FedNow service is going to validate the message, ensuring that all the information is within the payment message. In step 4, it's going to send it to the receiving FI. The receiving FI, through help of a service provider or third-party provider, is going to take that message, accept the message, and send it back to the FedNow service to let us know that the payment's good and they're going to accept it. And in step 6, settlement happens immediately. It's important to note, too, that this can happen in a master account, so your own individual master account, or through a correspondent. And then in step 7, it goes both ways. So the FedNow service notifies both parties that the transaction has been not only accepted, but it's been settled. So this all happens in under 20 seconds, but important to remember that on the left-hand side there, to the sender FI, you do have tools and kind of some checks that you can run before the payment is set out. We're going to talk about those. But first, I want to talk just a little bit about the growing network of FedNow. So just under 2 years old, or just over 2 years old, my apologies, we're already at over 1,500 live participants on the network. And one of the things that really excited me about coming to FedNow was there was this call to action for financial institutions of all sizes all over the United States to be able to offer instant payments, right? Stay competitive, offer their members or the customers a service that they expect. And in just that 2-year mark, we've already achieved that with participants live in all 50 states. And from 500 million to 3 trillion in assets, we've got financial institutions across the US actively participating on the FedNow service. We're very excited, and we've got a small credit union that has 3 employees.
I think I was going to say, we have some that are even smaller than that, right? Like we know that we've even brought some that are even smaller than that. So yeah.
Yep. Yeah, so we've got a small credit union with 3 employees that they are actively, on the service, and it's going smoothly. So real quick, what are the benefits, right? So financial institutions, we talked about staying competitive and meeting your members' expectations. But I think especially for credit unions, top priority is your member experience. And they want to be able to have these services, to be able to move their money faster, to meet the expectations of a faster environment through their trusted partner, their credit union. And so for a financial institution, getting settlement immediately, being able to have one solution for all, those are all great benefits. But overall, you're providing a service that your members already are asking for, even if they're not directly asking you, and building that loyalty and trust. for businesses having better control over their cash flow, and with those enhanced requirements on the ISO message, getting some of that invoice detail can help them streamline their reconciliation processes. And then, of course, for individuals, being able to send and receive money instantly, but again, doing it through that trusted banking app, doing that through that trusted credit union that they want to do that business instead of having to go out maybe to a wallet, perhaps.
Yep. And I think, one thing on that movement in treasury management, that's so important. And that's such a huge piece of tying all this together. Getting that really, that ISO messaging kind of was where I was going. The ISO messaging really gives that robustness across rails too, right? Internationally, that's really kind of the payload standard, like you're saying, Kristina, that's really going to revolutionize the way we move money all over the place.
Yeah. So for now, FedNow is just domestic. I want to make sure we're clear, but absolutely to your point.
Yep.
And we've already
interoperability of money, right?
Yes, exactly. And then infrastructure. Absolutely.
Exactly.
So with that said, we have a lot of value add features that FedNow offers. And I just really quickly want to say that we built this service around the needs of financial institutions. We went out in the market. We asked you all, what did you want? What was most important? And I think, no surprise, safety and security came up over and over and over again. So we offer transaction limits that you can set at the financial institution level. We have a negative list, which restricts money movement in and out of accounts that you define. We require fraud reporting. And not only do we just require you to report fraud, but we have our fraud classifier that helps you identify, and then for the larger community, identify what kind of fraud that was. Obviously, the secure message signing that ISO provides in the digital environment, account activity thresholds, which allows you to define customers by segment and set cumulative and velocity controls. But probably one of my most favorite is our network intelligent tool. It's our newest enhancement that's in pilot currently. That the tool allows financial institutions that are sending transactions over the FedNow service the ability to kind of do a pre-check on the receiver's account. So by way of an API, a sending FI will be able to request information about the receiver's account before they submit the transaction to the FedNow service. And so what we see this as providing institutions a greater visibility into transaction risk and leading to that more secure network. And lastly, what I'll say is we have the Federal Reserve Financial Services Risk Officer Survey. If you use the QR code on this next slide here, it'll take you to this full survey. But what we did here is we looked at 2024 and year-over-year trends in fraud attempts and losses. And what you'll see is that some of these legacies, like checks or debit card, have higher attempts and losses than instant payments in real time, which is actually on the other end of the scale there. And I would say that there's two reasons for this. Number one, we have built a lot of tools to help you as a financial institution safely and securely transmit your digital real-time payments. But think about it. You can't take an instant payment, a digital payment, and wash it like you can a check, or steal it out of the mailbox and modify it like you can a check. And so for all those reasons, we've really put a lot of thought, time, and processes into making real-time instant payments more secure over the FedNow service. And with help of our industry players like BankSocial, they're just enhancing those tools and fraud risks mitigations even more.
Excellent. Thank you. I'm going to pause for a minute just for a couple of questions that came through. So one of the questions that came through was, for institutions new to FedNow, what's the typical implementation timeline?
So that's a great one. I think that is highly dependent on how you're going to connect. Like I said, you can connect as a financial institution yourself directly. That does require a lot of technical expertise and lift. Or you can use a third-party provider, like we have BankSocial on the line, who's kind of done all the pre-work for you. And so if you do partner, and I think we have 90% or more of financial institutions that do partner with a third-party provider to help them with that lift, I would say, we can get someone, our quickest was 8 to 10 days, but it's probably more realistically, a month, maybe less. It just depends on how much work your service provider has done. And
yeah, I guess we can speak to that, Kristina. That's a good segue, like kind of, coming over here. So, we can typically get these things on. The way this works with the Fed, it's really great. We are able to go into the portal. We're able to bring on a new RTN. That takes us, very little time. I think minutes to 10 to 20 minutes it takes us to do that. If we're already connected into the core system, which we're connected into so many core systems already, typically there's a lift time of, depending on just what connectivity and how your core is configured, but it's as fast as a few hours, believe it or not. If you're in one of these cores where the pre-configurations are set, it's really just a configuration, turning on RTN, getting the right descriptors in there, the customized descriptors the way you want them, making sure you have your Fed account set up. But you're probably right, Kristina, that most of the time we see with all the testing and everything, we see between a few weeks and about a month to get up on the most basic of services. Now, even including send with all these protection capabilities and features and all these really cool things that are happening.
Yeah, and I think now is the perfect time, John, for all those reasons.
Absolutely.
For institutions. I mean, a lot of the pre-work has been done. A lot of those tools are in place and things move really smoothly. And the Fed has offered documentation to be signed through DocuSign. You don't have to wait.
So easy. Kristina, I think that's my favorite part of the whole thing is how easy it is. I mean, Elizabeth, you could probably speak to this, how you just signed a few documents and boom, we turned it on. So now we can hear a little bit from Elizabeth. Maybe you can give your perspective of how easy it was.
Yeah, absolutely. It was, I love DocuSign anytime we can use that instead of a wet signature. I'm a huge fan. So thank you very much. That was important. For us, we were the first partner with BankSocial. So
That's
as
right.
BankSocial as a provider for this, we worked with them to enable it. A key feature that stood out to me that has really helped us when we think about how we continue down this path is that once you enable that connectivity with FedNow, you have the ability to turn on both receive and send. So you have some flexibility with it. So for us, we started with receiving those instant payments into our institution, great benefit for our member. And that was kind of the approach we did. So I think flexibility is really important for all of our listeners to hear and understand, which that was important for FedNow and will make send even easier.
Mm-hmm. And certainly that's a lesson learned just real quickly is that, when you're working with your partner, as you go through the implementation, enable both, but you don't have to turn on send. This is not
That's exactly what we did, right, Elizabeth?
Yeah.
That's how we started. We certified you for both. So you were certified. Mm-hmm. And then when you're ready, we turn on the send. It's that easy.
Exactly.
And you can phase that. You can approach that how fits best with your institution for send.
Mm-hmm.
Yep.
And on that last slide, we saw some pretty cool numbers. We were really impressed when we were preparing for this. One of the questions that was asked, can a dovetail...
Bring that back up, Sarah. Bring that back up so we can see it. Go ahead, Liz.
Dovetails perfectly off of this, which is, are risk leaders today more concerned about moving too fast or moving too slow on instant payments? We constantly hear some credit union employees saying they're concerned about it moving too fast and some uncertainty. But then we get on the phone with most and they're saying, we're behind. We're already behind. What are you hearing?
Yeah, I would say, I'll start with this. I'm hearing the exact same thing, right? I think financial institutions were like, oh, well, we're going to hang back and wait. But when we show them the numbers just in their immediate area, they are behind now, right? And there are definitely certain use cases that are sensitive to timing, right? That have some benefits. But overall, I mean, if you look at 1,500 plus financial institutions that are already live, what does that look like to your more immediate area? And what we find is financial institutions, their customers, their members, they don't transact with 9,000 financial institutions in the United States. They typically transact with a much smaller number. So when you look at that, and it's usually between 9 and on the high end, maybe 15 to 2,000, 1,500 plus, you're already there. And in fact, their potential reach is, in most cases, even with smaller institutions, over 60%. So I think that speaks really highly to your question.
Yeah, that's great. We had a question. Does this replace Zelle?
I don't think it replaces Zelle. I mean, Zelle is very different, right? It falls into that faster payment. Zelle is a third party that offers faster money movement. FedNow is an opportunity for you to have that, I'll call it in-house solution, to bring back those accounts, bring back those deposits, and have interbank settlement without the availability to your members immediately with settlement 2 days later. FedNow helps you get that settlement, not only instantly, but still provide a similar member experience.
Excellent. Thank you. Well, I think we're having a little bit of technical difficulties with getting the slides to pop up here, but I have a good segue question. John, I have it for you. Why was it critical for BankSocial to build an orchestration layer instead of another standalone payment app?
Because, you know, the reality is that payments have become or are becoming quantum, right? Everything is being connected. The open connectivity of the financial rail system, especially now that we start to consider what the Genius Act has done with things like stable coins and tokenized deposits and international payments that can settle on these tokenized deposits. We see that the Fed and FedNow rails and you know, real-time payment rails are an integral part with the ISO 20022 you know, communication standard. These are the interoperability rails that need to exist in new wallet infrastructure and wallet orchestration infrastructure. And by having that infinite connectivity capability, you can orchestrate payments with the type of fraud mitigation techniques, the type of security techniques, and the type of safety and soundness that you couldn't when you try to combine 10 to 15, or in some cases, we've seen some of our financial institution partners with 26 and 30 you know, vendors just to send an ACH or just to send a wire. You know, you can end up having 5 or 6 vendors coming together, disparate vendors that the financial institution is basically burdened with putting together. And in some cases, they're more connected than others, but certainly we've seen, you know, just all that that come together like that. And having a single source orchestration layer that puts that safety and soundness first really gives you the ability to leverage these new rails and leverage the capabilities they bring. Like we were talking with Kristina on the, you know, being part of that alpha pilot with the recipient screening. We think it's amazing. And when we combine that with the other AI capabilities we have on transaction screening and member multi-factor authentication, in-app, you know, third-party authentication, when we combine all that together in the digital banking experience, in your existing digital banking experience as a composable, embeddable experience upgrade, you now really start having power to scale that only the largest of the largest financial institutions ever have historically and traditionally had access to. And that's why it was important to us to democratize this technology and bring it to, like Kristina, you had 500 million to 3 trillion. The reality though is this is happening in $50 and $60 million financial institutions. And for the first time in a long time, those cooperative and local and focused financial institutions are getting access to the same, you know, innovative and groundbreaking technologies that were only accessible to these largest of the large fintechs. And I think that's really where the rubber met the road for us on what we knew we needed to deliver. And so that's what we did. We went out there and we built that platform for that real-time payments, that aggregation layer, that quantum value connector for now that can be leveraged in any number of configurable ways now, like a FedNow right next to a stable coin, right next to a receive a stable coin, but utilize, and we'll talk about all the fraud detection. And you know, we were doing we really blew a credit union's mind open this morning with some of the capabilities we have around, you know, screening, both pre-transactional screening, pre-send transactional screening, both out in front, like with recipient screening, or utilizing any of our third parties like Chainalysis and TRM Labs, or any of our, you know, connectors into things like Verifin or SARS reporting to really turn a heavy burden of fraud and connectivity into something that is very well orchestrated in one single experience that's configurable. And so by bringing this to credit unions and banks that need real-time rails today, we can bring those member experiences that have been going to the Venmos and going to the Cash Apps and going to the, and bring that connectivity to those platforms, not leave those platforms behind, but bridge that connectivity so that the experience, though, to the member, to the consumer is there and is one way, is one button. And then we have that switchboard of our Neuron platform that allows you to turn on FedNow, RTP, P2P, stablecoin, tokenized deposit, international rails, all those connectivity points and value settlement systems in one cohesive platform.
Great. We do have a couple more questions coming. We have a lot of questions coming through. So I'm just going to pause for a moment and see if we can get through some of these. We'll save some for the end as well. One of the biggest challenges with instant payments for the client is remittance matching and reconciliation against invoices. Does FedNow offer the ability to include client data?
So I'll start, and then maybe, I don't know, John, if you want to add on to this, but, and the simple answer is yes, right? Through those ISO standards, it's that rich data that really helps to enable just that, to provide a solution for that gap. So you absolutely can use those fields to include the remittance, and then I think the matching and reconciliation, John, maybe you could speak to if you have any tools.
Yeah, so absolutely. Well, what we see is that actually a lot of the recon goes away because it's not like an ACH that could kick back for whatever reason, and now you have an exception report that's out of balance, right? Certainly, I'm not going to say that there's zero recon. You still have to reconcile the Fed master account to the GL at your institution, but it's one-to-one, right? We see very little exception, little to no exception in the FedNow flow, and you're minimizing significantly the impact that has on, just operational capability and your ability to monitor, your ability to cut loss to those types of scenarios. So yeah, we absolutely, the tools are in place, but I would say just the system itself, the way it's architected in the real-time payments with the FedNow, the instant settlement, all that information that you can validate back and forth between the payee and the payor, really puts you in a situation where that's not even as big of a focus that you need to have coming into this, because you've eliminated a lot of those exception reporting scenarios.
Yeah, I hear that all the time, John. When you go back to financial institutions and ask them, how's it going? It's a breeze. It's
a breeze, right? Yeah. They love it. They're like, oh man, it's so easy. It's one-to-one. It's all settled out in real time. It's so easy.
Yep.
Yeah, if I can add real fast to that, because I think it's important for the financial institutions out there to hear this. For those of you that work with your ops teams, I'm sure you hear about the challenges with daily recon in terms of timing, right? So you're dealing with delays in ACH, exceptions like John spoke of, if you're paying ahead, if you are giving a larger period of time for members or customers to really remedy maybe an overdraft. That's all adding complexity. The beauty of instant payments is it's that day. It's instant, right? So it's instantly for that. In that, of all the different payment types coming through, this is the simplest to reconcile.
Awesome. One of the, just a similar question, but if I'm a credit union, I'm looking at how to assess a more immediate area. What kind of data am I going to be looking at?
Well, it's quite varied. It can go as deep as all the ISO 20.22 payloads, and you can get as deep as you want into those payloads. And those payloads, like Kristina was saying, that handshake between the Fed to do all those checks, and it's like 20 steps, but it happens within 15-20 seconds, right? And so to the member, it's seamless. They see it happen in 10 seconds while we're doing some other checks in the background, and then the other side gets the money, or the money gets received. But you can drill down to the most detailed levels of data you could ever see in any financial transaction between systems that's, I think, to this point ever existed. Kristina, please correct me if I'm wrong, but that's kind of what ISO 20.22. I mean, I know a lot of people have been hearing about this and what it really means, but it's I think it's like, maybe my order of magnitude is wrong, but I think it's hundreds, not quite thousands, but hundreds of different payloads that correlate to different types of transactions, and they are robust and they are deep. And we typically use anywhere from 3 to 8 in a communication with the other financial institution through FedNow service, and we're sharing all that data. That's why we can do all that analysis. That's why we can do that pre-screening. And now you start to look at behavioral analytics inside your institution and with that person, and behavioral analytics on the outside with recipient screening. And you've just got this, low touch, really valuable, really safe and sound tool at your fingertips.
Next slide.
So the bottom line is that, people are already using these tools and they're going to continue to use these tools. But what we know about the fragmentation of finance and app cornucopia is that you start to lose the safety and soundness when you break apart the experiences, right? And I think that at the core of FedNow and what we've built is really to start to bring these experiences to the degree we can back in the digital banking, where you have the safety and soundness of the financial institution, of the, all the multi-factor capabilities and the great stuff that these digital banking platforms have built into their application suites. We can leverage all of that with very easy, low cost, simple to launch, embeddable solutions that can be done in 15 to 30 days that put you on a path towards innovation now, while allowing your members and your customers to connect with the rails you want them to connect with and provide those safety nets for the rails you want to connect them with. And this is where we kind of come into, alongside the FedNow solution with the recipient screening, some of the other tools we implement alongside things like Verifin, Chainalysis, TRM Labs, where as money starts to move, where you have a correspondent taking a stable coin or a tokenized deposit, internationally, and turning that into a Fed rail liability at another institution, right? You need to be able to, in real time or near real time, scan frontwards and backwards where the money's been, where the money's going, and know that when it reaches its destinations, you've got all the protections and coverages, liability coverages that you can, to ensure that system is reportable, is transparent, and ultimately has the safeguards in place that you need as you evolve to a more real-time world, to the Amazon world, right? Amazon's trained us all. Jeff Bezos, if you're listening, he's trained us all to live in that real-time world. And so that's an inevitability with the stable coin and everything that's happening right now, 24/7, right? That's another thing, Kristina, I think that's very important about FedNow. It's 24/7, and we can really, do things that you can't do with wires, but that you can do with FedNow to, maybe enhance the way wires work, right? For settling money. I'm not saying it's a replacement for wires. We still have a space for that, but that's really where the benefits come into these new features that get exposed, being able to leverage these fraud fighting capabilities, mitigation strategies that you couldn't do with ACH, that you couldn't do with some of these technologies that have come before.
And John, just real quick, adding on to that, depending on what your member base is, if you think about, we just had a credit union on our town hall last quarter, and they talked about how their members, they were flight attendants, right? And how their members needed their money at all different times during holidays, weekends. They're always working as well, right? And what benefit it brought to their members. And what she talked about was, hey, not more money isn't leaving the institution. Yeah, it's happening when they need it, and that's why we wanted it, and that's what they wanted. And so, to your point, I think it opens up opportunities. But as you really think about it, it's not something to be worried or nervous about. You're already providing this money outflow. I'm sure it might be happening at different times, but in a way, you can predict what that's going to be. And so you get to know your members and their activity. And I just loved that testimonial, because I thought, how great to hear. More money isn't moving out. It's not, running out the door. It's just a little bit of different timing.
It's what they need, right? What we actually see. So what we actually see when we look into the details with the financial institutions is we see it's like just in time financial need, right? Versus some of the systems, because there is that need, you don't have that real-time capability in your institution. You've got to move it to another app because you want to have that real-time capability for those circumstances. And then you move a little bit more there in that kind of scenario. Now you can just move as much as you need because you have that access to real time. And this is really where I think, Elizabeth, we'd love to hear from you on from the perspective of go ahead and go back, sir. Yep, right there. So from the perspective of a credit union, kind of talk through where your head's at and some of the maybe use cases and advantages you see in an ecosystem like this.
Absolutely. Yes. So, you hear about payments is probably the most talked about topic everywhere you go, right? Top of mind for every financial institution executive out there. It should be. If it's not, you need to really change your approach. And so for us, we really tried to ensure that we are top of mind of what our consumers, our members are expecting, whether they are consumer users of our products and services or they're business members and business users. And across the board, instant, real time, the Amazon effect, just like what you stated, John, is table stakes. That is the expectation. So if you're not offering it today, you already are at risk of being left behind. So you've got to take that action. I'm so glad that in 2025, we took those steps to enable both FedNow as well as the clearinghouse, our real-time payments with BankSocial. So we've seen tremendous month-over-month increases, transaction volume, dollars coming in using those rails. The reason we decided to introduce this is that it's an instant member benefit. So I love the example Kristina used. It was one I had not considered, nurses and hospitals, right? Of course, who out there wants to wait for their paycheck? Wouldn't you much rather get paid for the work performed that day? So our approach last year, we focused more, we know our membership base where we're at, we have a lot of gig workers that are employed by DoorDash, Uber, Lyft, whatever the case. And so they were not benefiting from their employers using that rail to pay them instantly. So once we enabled this, we had members that were like, oh, this is great. Now I'm getting my paycheck that day, that moment. So I don't have to wait for ACH to come through and wait for my account to show that balance. So it's a huge benefit for us, but that's just one small step we took. Looking into the future, 2026, it really is a complement, or it's complementary of several strategies we have. One is that continuous evolution of money movement for consumers using their app and really think about how can we try to keep more of those funds, those deposits in-house, and more members actively engaged in our digital app because we're providing the payment services they need. And so instant payments is key. And FedNow Send is on our roadmap. We're going to start kicking that off very soon because it not just complements and is a driver of our consumer strategy, it also is a non-negotiable requirement for our business banking members. They expect that they can offer this service to their employees, or they need to pay their merchants, right? Their vendors themselves. We were just talking about, I'm offsite today, so I'm in a different location. I was talking to our senior leadership team. So it's like, think about, you own a bar, right? You're a small business owner, you own a bar. You get your liquor delivery, your keg delivery. That provider of that, they want to be paid that day. And you never, maybe you're avoiding a fee that you would pay by paying it later, or you're not using a P2P rail that's not as safe as secure. So this is one option that really provides those members that ability to send it, pay for it, and they're done. And so this is becoming what today is considered kind of like a nice to add service, but very quickly is going to be a requirement for members to bank with you. And so that's what's exciting for me. And then payments overall, we keep an active look at how members are using Venmo, PayPal, Robinhood, crypto. Transaction volume continues to shift. And so this is a very active focus for our credit union.
Elizabeth, I was just going to say, I love what you said, because I heard from an FI recently that said, if we only have receive, we're only offering our members half the solution.
Exactly.
They don't want to send. So I think you nailed that perfectly.
Thank you. Yes.
Just talking. Oh, sorry, Elizabeth.
Oh, no, I was just saying it was a good step for us and kind of got us ready, right? So quick follow-up is send for us. Go right ahead, John.
Yeah. And I was just going to add, this also sets you up. You kind of got to think okay, well, does this also set me up for the future? Sure, it sets me up for, the immediacy of what people kind of think they want now. But when you start to think about how pay by bank will evolve and how, the point of sale system starts to evolve when payments can be done from inside the digital banking app, right? Virtualization of payments, it's probably not 12 months away, but it's probably also not 10, 12 years away. It's probably 3 to 5 years away where pay by bank is going to start to be something that you need to have kind of readily available. And this positions you for that. Also, with treasury management, just to expand slightly on it, it's being able to hold those funds until the last second, right? When you've got to let go of those funds 4 days earlier because it's going to take ACH 4 days to get there, and you don't want to get, penalized for having a payment hit there late, but you can hold it until, the last 5 minutes of the day. How does that help with treasury management? Tremendously.
That's an excellent point.
That was a question that came in actually, with where are credit unions most likely to see new revenues emerge with real-time rails? And John, you touched on that with being able to hold on to those deposits. Are there other areas?
Well, I think, as pay by bank starts to come into effect and interchange starts to change, we're starting to see interchange start to change. I think there are other places for settlement and connectivity to lower costs. It's not always about, just making money. Sometimes it's about lowering costs too. Like, what if you could lower your fraud costs by 27%? What does that do to your financial institution, right? So you got to look at this holistically, top line, bottom line, take care of the top line, and kind of the bottom line follows, and all those things in between. So, we certainly have a robust approach to how we implement and look at this. And absolutely, there are ways to increase revenue opportunities or hold on to revenue opportunities that maybe seemingly going away with how interchange is molding, right? But, we also think there are ways to tremendously lower costs in all these forms, in operational activities and fraud management and mitigation tooling.
And I talk to FIs all day about that, John. We talk about not only kind of what we've heard is absolutely we've gotten new revenue, right? I would actually just talk to a credit union that said we had a garbage company come in, and we offered instant payments, and now they're paying out, dumpster rentals, and that's all new revenue for us.
Yep.
But even, aside from those specifics, lowering the operational costs, those operational efficiencies, financial institutions have reported that they've implemented small changes, and it has, made their employees much happier and lowered those costs. So when John says look at it holistically, absolutely. I think there's a lot of opportunities outside just new revenue streams.
And just to add to a little bit, it made me think of something that with credit unions, we talk a lot about value added service. And this fits so perfectly into that mantra, because this is a service that is a benefit both to our members as well as to the financial institution. And so it's our responsibility to ensure, especially as a credit union, that as we see those savings, both at the transactional level, at the income level, for a variety of different reasons, that we're able to really rethink that entire revenue stream and pass on savings to our members. So we're giving back to our communities the way we should. That's our responsibility as a credit union.
Yes, absolutely. There's a question that came in, Kristina, on the 1,500 FIs that are using FedNow today. What is the percentage that are using Send?
Sure. So as a percentage, we actually tripled since Q4. And it's over a third of the participants that are live on the service are enabled to send. And we're seeing that. I think Elizabeth spoke to this perfectly. She's seeing more coming in, and that's because financial institutions are
more are sending.
They're making more use cases, and so this is
right.
growing quickly. And when you think about it,
Yep.
And I love to say that, of the financial institutions I talk to, that even if their approach is received now, like I said earlier, they're only offering half the solution. I mean, really, the value is coming to light as these institutions think about it. And as we enhance our fraud tools, as third-party providers enhance theirs, but they start, we'll say small, maybe a very select few customers that they open this up to. And then it just grows rapidly because they see all these benefits. They're not as scared anymore. I mean, kind of the fear of the unknown has been lifted.
Awesome. We did a Send in-house. I got to be a part of it, and we were very excited. And we did it with a prospect, and so we were all like kind of waiting, and it went well. And it was kind of one of those moments, but it was very exciting. I think I know for everybody on our side, we're trying to play it cool. on the credit union side, they were like, this is so awesome. So we've been excited about it as well.
I feel like that's what my experience through the pilot, right? When we launched, it was like everybody held their breath, and then it went successfully, and we all cheersed afterwards.
Yeah. I wish I should say everybody played it cool but me. I did like a raise the roof. Very embarrassing now looking back. Tons of questions coming through. So I'm gonna try to get some of these out because we have about 10 minutes, 11 minutes left here. For credit unions still debating FedNow, what's the risk of waiting another year?
Well, I'll say from me, but I think Elizabeth and John, you're probably better to answer this because you're living it, right? When we look at that, I mean, almost 1,600 is tremendous growth in 2 years, right? And it goes to that experience that Elizabeth talked to, right? I mean, as credit unions, that's so valuable. And if I always talk about it as the experience, and I'm going to say this very candidly, we're sitting around a table and, you know, Elizabeth and John transact with each other and they're like, oh, great, I got it right away. And then they send me money and I'm like, oh, I don't have it. I don't know what happened. And quite frankly, I probably don't care, but it's the experience. So then I ask Elizabeth, I ask John, like, well, how did you get it? And they're like, I don't know. I bank with XYZ. And then now I want that, right? Now I have FOMO and I want it. And so that's what I talk about. And overall, you know, our members are loyal, but this is in demand. And it's going to be that experience that's going to drive that change. And you don't want to be. Also, don't forget FedNow, and I have to make a shameless plug here real quickly. The Treasury did announce those emergency payments are now being dispersed.
Yeah, exactly. So what does that do to fraud, right? Just that right there, not having, so, you know, eliminate the fraud by getting those checks and turning that on. Like, you know, the reality is that these digital evolutions are getting faster and faster. And when you look at what happened in the late 90s, early 2000s with mobile check deposit and check deposit, things like that, eCheck 21, that was a pretty rapid shift to where, you know, within 3 to 5 years, checks, you know, I've talked to the head of payments for several, including, you know, NCR, and these evolutions are coming faster and faster. If you look at how fast stable coins are capturing market internationally for international payments and how fast dollars moving, you know, internationally, because FedNow is not available internationally yet, right? I don't know. I don't want to lead on to any alpha. There's nothing that I know, but you know, it's not. And so, but you know, the viral effect of how fast this technology is spreading and how fast access, you know, the way to think about it is like, once somebody understands that they can get this tooling they need from somebody else who can provide it, that's a customer right now, they're likely not coming back. And once somebody understands that they can't get those tools that they can get everywhere else, they're likely not going to sign up. And so in that kind of vein of, that's the reality of what we're seeing. Can you guys hear me still?
Mm-hmm.
You know, that's the reality of what we're seeing. And so waiting another year with it being so low cost, so easy to turn on, so kind of widespread and available, so low risk with receive, it's really not advisable, I don't think, to wait. There's really no reason why. Elizabeth, I'll let you kind of wrap a bow on it, but.
Yeah, I mean, so much. Everything we just mentioned is so true. And I loved the tie back to member experience because that really is key. Because at the end of the day, we have, as a financial institution, something that we benefit from, but I don't think we dip into and leverage enough, is that we have their trust. And so as their trusted financial provider, consumers they don't really know, like, if they're just paying someone, right? They don't really know how it got there or how it happened. All they know is that their bank or credit union offered it. And so you want to make sure that you're not left out, that you are part of that mix, and that you don't have the experience where, oh, I didn't get my money as fast like the others. Well, maybe I need to move to Chase, or maybe I need to move to these other institutions. So I think for me, that's really trying to simplify it and take it home, is that these are steps financial institutions just have to take. This is a continuous evolution of payments. This is one small but very impactful step to take.
And, you know, for as official or unofficial it is, I kind of say this sometimes, but, you know, Fed Waller was up just over a month ago stating that, you know, they were thinking about giving skinny master accounts a way to promote kind of innovation in payments. And I don't know where that's going. And I know, Kristina, maybe, you certainly can't. And if we need to, do something with that, we can. But I think there's definitely a wave of coming. If it's not that, it's Robinhood wants to be a bank, and Coinbase wants to be a bank, and all these guys want to be banks. And eventually this neo-banking is going to become so easy that they're going to become banks. And we've got to be able to, build upon the leverage we already have.
Yes.
So I think maybe a couple more we have, but there was a question on digital banking and digital banking providers who are a little slower to catch up with this, or what do you guys, it talks to the trends. They're asking about the trends. What do we see happening with digital banking providers as it relates to getting this within the digital banking app?
Well, I think, Liz, the great thing about the digital banking ecosystem that's out there right now is a lot of them understand and have understood for a while that they need to build an open, to a degree, connectivity platform. And so a lot of the digital bankings already have a way for you to take an experience that we have, right? They've built these great vessels, these great tools, and you can take an experience like what we have, that we've wrapped all this safety and soundness around all the great things that the Fed has built and all these other payment rail connectivities. And you can launch an experience within 15 to 30 days, a robust multivariate orchestration hub for payments and money movement within days. And so we don't believe any longer that the digital bankings are the barrier, or the cores are the barriers for getting something like this to market fast, low cost, and in a way that starts to impact your bottom line and the member experience from day one. So that's been our perspective. We're certainly integrated with a number of digital bankings, whether that's through APIs or already pre-filled experiences, or a combination of native and, pre-built experiences, really just to move in a way that every financial institution can do, that allows them to continue to innovate at the pace that they need to remain not just relevant, but an underpinning of safety and soundness for the lives of their financial well-being of their communities. And by leveraging these tools in the way that they're coming together and the way they're available now, you can do that at scale and at speed that these fintechs and these neobanks are not able to match and touch.
Mm-hmm. So we have 4 minutes left. I'd like for each of you to leave us with maybe a little note on how credit unions, regardless of size, can take the first 3 steps to get to where they need to be, whether it's compliance focused, operations focused, maybe they need to contact the Fed. What does that look like? Just the first 3 steps that they need to take in order to start this process.
I'll get started off. So I feel like we're, maybe the first step of that. So like I said, our team was built. We've got 4 folks on my team, is the FedNow client specialists, and it was built and designed to help financial institutions adopt instant payments. Understanding it's brand new, a little scary. I'm going to make that not scary for you anymore. So you can reach out to your relationship manager. If you go out to frbservices.org, up in the right-hand corner, there's a contact. If you hit contact and put in your ABA number, your relationship managers, all their information will come up, and then they'll engage someone like myself. And I just want to do another slightly shameless plug. Our team has data, right? ACH-based data that runs through the Fed. And we can help you kind of understand, who do your members, who do they transact with today? What does that potential reach look like? Look at wallet data that we have, show you that demand, and look at your competitive and the broader landscape of, what are credit unions that are like me doing. We have a lot of background information. We talk at conferences, all the things, right? So we can help you, even if it's like, hey, we don't know where we want to start. Can you help us strategize? What does it look like? Yeah. And then we have services so you can get in contact with folks like BankSocial. Elizabeth's a great advocate to talk about what they're doing. And I know that's really important to credit unions to hear what their peers are doing.
Awesome.
Absolutely.
Thank you. Elizabeth, can you share?
Yeah. So that I love that. And I noted the site that you stated. I want to make sure my team knows that and they're using it. It's so important. But I think I've heard this from quite a few credit unions that there's just this hesitation, like a hesitation, and it could be that they think it's too risky or they're not quite sure where to get started. So I think it's important for credit unions to make sure that you're having the conversations with your board, have the conversations with your executive team, use the data that you can get from the Fed that really helps make that business case to improve why this is important, not just for now, but for the future of your credit union. That's key. And you got to keep having those conversations. That's so important. Second is make sure you, whatever partner you work with matters. And finding that right partner, like BankSocial is a great partner for Great Lakes Credit Union. Of course, yeah. And so making sure you find that right partner who can work with you and continue with that down that path. If your digital banking provider is someone else, have a conversation with them. Make sure they know how important this is to your strategy, to your growth, to meet members' expectations and experiences. And if they're not offering that, make a big stink about it because they need to. This is the future. And it's a requirement from my perspective.
Yeah, so I think Sarah, maybe put up the QR code. If you need more information, we are happy to, provide a roadmap tailored to your institution and what's most relevant for you. What part of this is most relevant for you? Happy to support any Fed research you're doing and introduce you to the team members that we have access to as well. And then, just generally looking at your digital banking as a vessel that is capable of working with a provider like a BankSocial to quickly, in almost every case, launch what you need in a seamless, secure, low cost, and ready to go experience for your member that will start impacting your entire operation from day one. We love to, quick discovery and show you how it works. But certainly, get in there and start looking at the lack of barrier to innovate into this new area.
Excellent. Thank you guys so much. We're trying to pop the QR code up on here. I don't know.
There it is. It's up in the corner there, up there, up there. There's a story of a lovely lady.
Everyone. You got the phone. You can also go to our website, which is banksocial.io. You can contact myself at liz.winninger, WINNINGER, at banksocial.io. And we would love to talk to everyone. So Kristina and Elizabeth and John, thank you guys so much for your time. It was very informational. We still have a ton of questions, so we'll be sending out a follow-up email along with a white paper. And look forward to seeing what happens in 2026 with this great progress that's happened so far. Thank you guys.
Thank you.
For the invite.
Thank you. Bye-bye.
Bye.